So hopefully you caught the first video in this little mini series talking about the psychology of lenders and banks, the influence that the economy has on that psychology and underwriting, and the biggest influencer, which is the Federal Reserve, on the economy when it comes to monetary policy. Basically, the goal is to cover how to get high limits, best rates and terms on all your lending by understanding what's going on in the economy and monetary policy and how that's going to affect banks' underwriting, so you can be in the best position when you apply for loans and put your applications in. So I already covered what has happened over the last 4 years, going into where we're headed right now, which is probably going to be one of the most exciting years economically, interest rate wise, that we're going to see, because we're in an environment where the Federal Reserve is just about ready to pivot their policy from a quantitative tightening policy to a looser monetary policy. They are ready to go back to dropping interest rates and potentially pumping money back into the economy. This is going to completely shift banks' underwriting and lending underwriting guidelines and standards, who they're going to be lending money to and at what rate. Right now, with a tighter monetary policy from the Federal Reserve, banks have been punched into a situation where they have to take less risk and be more mindful of who they're lending money to. This is about to change if the Federal Reserve pulls rates down like they plan to do. With us going into the second quarter of the year at the time of this recording, meaning that at some point they're going to be consecutively dropping interest rates, and they plan to do so all the way through 2026, meaning that we're going to get into an environment where banks and lender psychology will go from a low risk appetite, requiring a bunch of documentation, weeding out risky borrowers, and looking for only the best of the best to lend to. They're going to change that to a broader base of people they're going to lend to. Now, I personally believe interest rates come down, banks start to increase their lending again, and broaden their appetite for risk. They're still going to require a lot of paperwork. I work for a major financial institution. I take applications for consumer and small business lending, and I am watching right now how stringent they're getting on verifying everything that's being put on applications. So I don't think that the paperwork part is going to change. What I do think is going to change is the amount of money that's going to be lent out. The rates and terms are going to get more favorable. Money will get cheaper to borrow. I think limits will get higher for some people. And I think if you're looking for lines of credit and loans that you're going to get better rates and terms, you might be able to do so with less demanding underwriting. This is a plus. This is a good thing, because that basically means that for the first time in about 2 years and some change, more people are going to have access to capital. And that's going to be a pro. There's going to be a side effect to that though. Because the economy is moving so much faster now with technology, because the banks have evolved financially and they're making the decisions faster, when the Federal Reserve lowers interest rates, I've been saying all of 2023 that the financial markets are going to go nuts. The stock market, the price of real estate, businesses, a lot of things are going to get really expensive. The barrier to entry is going to get higher because more people will have the ability to get back in the game. So think of the price of real estate, residential real estate in particular. It went nuts during COVID. It hasn't really come down in most markets with a few exceptions. And even at the time of this recording, with interest rates at the highest they've been in almost 20 plus years, real estate is still growing in many markets. Imagine when it becomes more affordable for more people. When mortgage rates come down, when more people can take out a mortgage and afford more home, it's going to create even more buyer demand when we still have a limited supply and a slow growth in the amount of supply. You literally have the majority of markets in the United States still growing with tighter lender standards, higher interest rates. When the Federal Reserve starts to pull those rates down and inventory is not kept up, you are gonna most certainly see prices spike in real estate in many residential markets for real estate. So if you're a homeowner, an aspiring homeowner, a real estate investor in a residential space, or even if you're in multifamily, it's gonna influence tenants as well, because the rental market will be affected by the fact that the housing market is gonna be so hot, so tight. Stock market is gonna be the same way. All that having been said, this means that you getting access to capital is going to be essential, positioning yourself, because the name of the game when the interest rates do come down is going to be speed. Who can get to the assets the fastest? Those who are well capitalized are going to be the ones to prosper the most, because you'll be able to take down real estate deals. You'll be able to buy businesses and invest in businesses at a faster rate than other people, getting yourself in a great financial position where banks trust you, lenders trust you, lend you money, and you go out and deploy that money to grab assets at the best price possible before the prices spike and there's not a lot of value to be gained in those assets. Right now, my personal agenda, as you've been following this channel, and if you're new, I'm telling you, is to access as much capital on the consumer and primarily the business side. So what that basically means is that I am positioning myself when interest rates starts to come down to be able to be one of the primary people out here taking advantage of phenomenal real estate deals and other business opportunities and business ventures. Having the capital to structure good deals, to buy businesses and buy real estate at discounts and solid prices is going to create massive wealth for the right people in the future. And lending is at the heart of it. Being able to borrow money at the cheapest rates give you the greatest spread on your investments. If I only had to borrow at 5% and the investment is going to give me 10 versus if I borrowed at 8% and it's giving me 10, I'm making so much more money. If you can get access to capital as the Federal Reserve's policy starts to shift and get access to high limit credit cards, $20, $30, $40, $50,000 limits through multiple institutions, business lines of credit, real estate loans, private money, name of the game is going to be speed, because you'll be able to deploy into deals, get them cash or get them on the best rates and terms that works for the seller. And you'll be able to do it when others don't have access to that kind of capital. When others are still trying to get approved for that loan, if they're too busy supplying documentation and fighting underwriting, you'll already have the capital. That's the name of the game. That's the game I'm playing right now. And the Federal Reserve, the economy is influencing where this is headed. And that's why I'm covering this in the way I'm covering it, and will continue to do so as the Federal Reserve gets closer to dropping those interest rates and changing the game of musical chairs when it comes to investing in businesses and investing in real estate or home ownership, if that's the name of the game for you right now. Get serious about your access to capital. Get serious about your banking relationships. Take it seriously, because if I'm telling you, properly position yourself, and you can do so while the opportunity is right, because assets are going to start to balloon over the next few years. And if you can get in right now at the best rates and terms, you'll be able to kick back and enjoy the best returns on those assets now before they start to bubble, because you had the access to capital to deploy in the fastest rate possible to take down those assets. Comment down below. Let me know what your plans are, investment-wise, strategy-wise, when you get access to the capital you're trying to get access to. Or if you comment down below if you already have access to a ton of capital, let me know what success you're having. But let me know your investment strategies in real estate, buying businesses, stock market, crypto, you name it. Comment down below. Let me know how you plan to deploy the capital you've worked so hard to get in position to access. I'm going to put my comments down below and let you know where I'm at and some of my numbers, and I will continue to put them in the videos so we can all prosper in the new economy that's coming in front of us. To all my pioneers, welcome back. To my new viewers, welcome in. I want each of you to stay focused, stay in motion. I'll see y'all soon.